Hello and welcome to the daily analysis, which is Wednesday, 14 August 2024. The dollar US dropped below 103 on Tuesday after the PPI came in lower than expected. Despite this, the US economy continues to show strength growth, suggesting that the Federal Reserve may not push to rush cutting interest rates. The market sentiment was calm, with US stock futures steady and the 10-year Treasury yield around 4%. While expectations for Fed policy haven't changed, there's a possibility that the market is overestimating the likelihood of aggressive monetary easing. Technically, the US dollar index remains bearish, staying below the key moving averages 20, 100, and 200-day. The 14-day RSI is below 50, indicating ongoing selling pressure, and the MACD is in the negative territory. Support is seen at 102.40 and 102, while the resistance is at 103 and 103.56. The overall outlook suggests a potential for further declines. The WTI crude oil prices fell during the Asian session on Tuesday, breaking a 4-day winning streak after reaching a 3-week high of around 78.5 to 78.8 earlier in the week. The oil prices may have surged past the $80 psychological level, driven by expectations that the OEPC may limit production at its upcoming meeting. Saudi Arabia and Russia also plan to cut production in August and September, further supporting the prices. The upcoming International Energy Agency IEA report on Wednesday is expected to increase the market volatility, as it often presents a more cautious outlook compared to OPEC. Technically, the key support level is around $78.17, which align with the 200-day moving average. Other important levels include the 55-day and 89-day moving averages at $79.35 and $79.46, respectively. The 14-day RSI suggests there could be room for further declines. If prices drop, watch for support at 78.41, 77.87, and 76.92, which is 38.2% Fibonacci level. On the upside, the resistance is seen at 80 and 81.74, 76.4% Fibonacci level. At the beginning of the week, the gold prices rebounded by over 1% as market concerns about escalating conflicts in the Middle East and Ukraine's sudden attack on Russia led to safe haven buying. Additionally, the dovish expectations from the Fed put pressure on the US dollar, helping gold climb near its monthly highs during the Asian session on Tuesday. However, optimistic market sentiment triggered some selling, with investors cautious ahead of the US inflation data release. Despite this, the gold remains near its 7-month high and could potentially break out of the recent range. Geopolitical tensions between Israel and Iran-backed groups, along with US inflation data and Fed speeches, will continue to influence gold prices. From a technical standpoint, the breaking through the $2,448 to $2,450 resistance level is a bullish signal. Daily chart oscillators also show positive momentum, suggesting gold could challenge its all-time highs around 2,483 to 2,484, and potentially the psychological 2,500 mark. If gold falls, support is expected at $2,450 to $2,448, with further support at 2,424 and 2,423, and 2,412 to 2,410. And lastly, for our currency pair AUD-USD, it finally broke above the 0.66 mark in a strong rebound, driven by renewed risk appetite and a weaker US dollar. Despite the weaker than expected Australian wage price index data, the pair held steady around $0.66 during Asian trading on Tuesday, and the hawkish stance of the Federal Reserve of Australia continues to support AUD-USD, with the market awaiting key US data. The pair extended its gains following Australian economic reports, while a rise in the Westpac Consumer Confidence Index in August to 2.8%, up from 1.1% decline in July. On the technical side, the AUD-USD traded above 0.66 on Tuesday, staying within an upward channel that suggests a bullish trend. The 14-day RSI is consolidating around the 50 mark, and a move above this level could signal stronger bullish momentum. On the upside, the AUD-USD has tested the upper channel line at 0.666. If it remains above this level, it could target 0.665 and the 6-month high of 0.6798 reached on July 11. In terms of support, the AUD-USD is testing the 0.6577 level and immediate support at 0.6572. 50% Fibonacci retracement at the 0.6798 to 0.6347 move. A break below this level could reinforce a bearish bias, potentially pushing the pair towards the psychological level of 0.65 and further to 0.6453, which is 23.6% Fibonacci retracement. And that is all for today's daily analysis. Happy trading and happy Wednesday.